Good morning. Welcome to your daily solo 401k webinar Q&A session with my solo 401k financial. Here we try to help you stop overpaying taxes and start building your retirement wealth. Today's topic is how sole proprietors can still open a solo 401k plan in 2026 so that they can make all contribution types for tax year 2025. That is employee contributions, employer contributions, and voluntary after-tax solo 401k contributions. So I see we've got a couple questions here on the live chat. So go ahead and use the chat to ask questions, type them over so that we can be sure to get to them all. Let's get started by looking at some of these questions here. Taxpayer wages less federal withholding less Social Security taxes for 2025 was zero. Can taxpayers still make a Roth solo 401k employee contribution for 2025? It was established in March of 2025. Good question. So here it appears that the individual is self-employed in an S corporation. So keep in mind with an S corporation, that's your self-employed business, the contributions, whether employee Roth solo 401k contributions or any other type of solo 401k contributions such as employer contributions, as well as voluntary after-tax solo 401k contributions, those are all going to be based on gross wages of that W-2. So you need to look at your client's W-2 and see what amount is listed in box 1 of that W-2, which is the gross wages. If there's a 0 listed there, then there's your answer. The individual cannot make contributions. But if there is a figure listed in box 1 of that W-2 titled wages, then yes, the individual can use that figure to calculate his employee Roth solo 401k contributions. So again, the ability to make Roth solo 401k employee contributions or any contribution for that matter is determined by the amount of gross W-2 wages, not the net amount after withholding and Social Security taxes. So again, as long as that taxpayer receives W-2 wages from the S Corp for 2025 and has a figure listed in that box 1 of the W-2 wages, then yes, he or she can make Roth solo 401k employee contributions for tax year 2025. Let's take a look at some more questions here. I have an LLC taxed as an S Corp. On December 31st, I submitted year-end payroll to payroll provider, and it included $17,500 employee pre-tax contribution. I haven't deposited that into the 401k yet. I have room to contribute more, but is it too late for it to be pre-tax? Does it all have to be employer profit sharing or employer voluntary after tax? Since it's a new year now, also, when do these have to be deposited into the 401k? So if your business is taxed as an S corporation and your solo 401k plan was established by December 31st of 2025 or prior, then yes, you have until the S corporation tax return due date in 2026 to make all contribution types for tax year 2025. Therefore, with an S corporation, the contribution deadline is going to be March 15 of 2026. If you file a business tax return extension for that S corporation, you're going to have until September 15 of 2026 to make those year 2025 contributions. And again, employee contributions, employer profit sharing contributions, and voluntary after-tax solo 401k contributions can all be made for tax year 2025 here in 2026 by your business tax return due date plus timely filed extension. So with regarding your payroll company, you may need to work with them and ask them to amend that W-2 so that way you can make your contribution and you can tell them exactly what amounts to report on that W-2. Also, we have a good cheat sheet on our website regarding how to report contributions on your tax return for all entity types, including an S corporation. I'm going to share that link with you now. Give me a moment here. Take a look at this link I just shared on the live chat, which has a good chart that talks about how to report contributions on your taxes. I'm going to go to that page here and maybe you can click on it and follow. But if I look at the S corporation and I'm looking at employee contributions, for employee contributions, if it's an S corporation, those are reported on, if it's an employee contribution, that's actually reported on Schedule 1, line 16. That's where you actually report employee contributions. So it's going to be Schedule 1, line 16. That's where you report pre-tax employee contributions if your business is taxed as an S corporation. Now, you can also report those employee pre-tax contributions in box 12 of the Form W-2, but they're typically reported on Schedule 1, line 16, which is an attachment to your Form 1040. Just don't report them on in both places. So again, you can work with your payroll company to have them report the employee contributions in box 12 of Form W-2, but most individuals typically report them on Schedule 1, line 16. However, do not report them in both places. Hopefully that sheds light on your question there. Let's see if we have some more questions here. Here's a question. My business is a single member LLC taxed as a C corporation. I had one 2025 payroll with the 12/31 check date and $27,000 of W-2 wages. From that paycheck, I made a $23,500 pre-tax employee deferral based on IRS code 404A7 and IRS one participant 401k guidance. I calculated the employer contribution as 25% of W-2 compensation and made that contribution for 2025. Can you please confirm that the $6,750 employer contribution is correct? So yes, when your self-employed business is taxed as a C corporation or a C corporation, all contribution types are going to be based on your W-2 wages. When it comes to calculating the employer contribution, it's going to be 25% of that box 1 gross W-2 wages. So if you reported box 1 W-2 wages of $27,000 and you multiply that times 25%, then that's the amount of employer profit sharing contributions that can be made to a solo 401k plan that's sponsored by a C corporation self-employed business for tax year 2025, which means that it's $6,750. However, you have to take into account any employee contributions that you've made as well, because you can now contribute more than you reported in W-2 wages from your C corporation. So if you only reported $27,000 of W-2 wages, then you're not going to be able to contribute any more than $27,000 between employee contributions and employer contributions. So therefore, since you made a $23,500 employee contribution to that solo 401k, then you're only going to be able to contribute the difference up to $27,000 as an employer profit sharing contribution. So let's subtract 23,500 from $27,000, resulting in $3,500. Therefore, you're only going to be able to contribute $3,500 as an employer contribution. And this is a very good question, an important question, because a lot of individuals confuse the fact that contributions are based on your gross W-2 wages, meaning you cannot contribute more than you make, nor can you contribute more than the overall limit. So therefore, since you only paid yourself $27,000 of W-2 wages, the maximum you're going to be able to contribute to a solo 401k plan is going to be $27,000. Because another point of confusion I see quite a bit is individuals don't understand that the employer contributions are also based on your W-2 wages, and therefore you have to have enough W-2 wages to support that employer contribution combined with the employee contributions. So again, in your situation here, you cannot contribute $6,750 in employer profit sharing contributions because you have already contributed $23,500 in employee contributions. And when you subtract that $23,500 from the $27,000, the result is $3,500. Therefore, as I already mentioned, the maximum employer contribution you're going to be able to make is going to be $3,500. Let's keep going here. Let's see if we have anything going on. Let me go back here. Looks like here's another question here. I have a side gig that paid me about $100,000 in 2025. I also contributed $31,000 to both my Roth 403B and Roth 457 through my W-2 job. Can I contribute to my solo mega backdoor account in 2025? Well, number one, that 403B contribution is going to impact, it's going to indirectly impact your solo 401k contributions. And that's all types of solo 401k contributions, including the voluntary after-tax solo 401k contributions as part of the mega backdoor Roth. The 403B is the only retirement plan that will reduce your solo 401k contributions on the voluntary after-tax solo 401k side. So therefore, since you already contributed $31,000 to your 403B plan, you're only going to be able to contribute the difference up to the overall limit to the solo 401k plan, provided you have enough net self-employment income, which it appears that you do. You're saying you have $100,000, and I'm assuming that we're talking about a sole proprietorship here. So you definitely have enough funds to maximize your voluntary after-tax solo 401k contributions. For tax year 2025, the overall contribution limit to a solo 401k plan is $70,000. So let me get to that figure here. Give me a moment here. Let's get to that contribution amount. So for 2025, the overall contribution limit is $70,000. Therefore, you're going to need to subtract that $31,000, that $31,000 contribution that you make to that 403B from $70,000. The difference is the amount that you can contribute to the solo 401k plan as a voluntary after-tax solo 401k contribution. So what? 70 minus 31 is going to be $39,000. So you can contribute $39,000 as a voluntary after-tax solo 401k contribution and then convert it to the Roth solo 401k plan. So you're going to be able to make it to this bucket right here titled after tax. That's where you would deposit that $39,000 contribution into, and then you can convert it to the Roth solo 401k plan, and that results in the mega backdoor Roth. Then you'll want to make sure you complete our conversion form on our website so that we collect the necessary information to issue that Form 1099-R. We issue a copy to you, and we file a copy with the government. And you're going to want to convert that voluntary after-tax solo 401k contribution immediately so that there are little earnings. Just the earnings will be taxable when they're converted to the Roth solo 401k. Now that 457B, the good thing about the 457B is that unlike a 403B, contributions that you make to a 457B do not impact your solo 401k contributions. So that's one of the big differences between a 457B governmental plan and a 403B plan. Okay, let's take a look at some more questions here. Here's a question. Is it too late to amend W-2? Is that okay? Would I just report it on taxes to get the deductions? It's never too late to amend anything, especially here. It's only what, January 5th? So payroll companies can certainly amend a W-2. But if you're piggyback, if your last question, as I mentioned there, employee contributions are typically not reported on the W-2 anyways. They're typically reported on a Schedule 1, line 16, which is an attachment to your personal Form 1040. So if you're looking to have your payroll company amend your W-2 to report the employee pre-tax contribution, or even an employee Roth solo 401k contribution, which doesn't get reported on the W-2 anyways, then you can go ahead and have them amended if you want them to report that employee contribution on a W-2, but typically it's reported on Schedule 1, line 16. But whatever you do, don't report it in both the W-2 and on line 16 of the Schedule 1, as that will result in double reporting. And again, take a look at that link to that page I shared earlier, as it has a good chart that breaks down how to report all contribution types for a solo 401k plan: employee contributions, employer contributions, and voluntary after-tax solo 401k contributions. It breaks it down line by line. So that's definitely a good resource to bookmark. It's one of our most frequently visited pages. Okay, let's see here. Got a follow-up question here. Give me a moment here. And we'll take a look at this question. One moment. Give me a moment while I gather my slides here. Give me one moment here. Okay, so here's a question here. So now that I have over contributed by $3,250, what are my options? Call up the brokerage and ask for a return of these excess contribution. Furthermore, I did do a $9,000 bonus through the same payroll provider on December 31st. However, the check is dated January 5th, 2026. Is it better to call up the payroll provider and ask if they can amend the W-2 comp or just withdraw the excess? So one, the contributions to that solo 401k plan are going to be based on your W-2 wages. So you're going to want to determine whether or not that bonus that you're referring to was reported as W-2 wages, box 1. If it was, then yes, you'll be able to contribute based on all of your gross W-2 wages. With regards to when you receive the check, that really doesn't matter when you receive the check. What matters is whether or not the payroll company is treating those W-2 wages as tax year 2025 W-2 wages. So whether you receive a check on January 5th or some other time in January, that's a moot point. What matters is whether or not they accounted those wages as year 2025 wages, because contributions to the solo 401k plan are based on your W-2 wages from tax year 2025 if you're looking to make tax year 2025 contributions, and then we're talking about an S corporation or C corporation, self-employed business. Regarding the contribution, did you make that contribution here in 2026, here in the last few days, or did you make it in December or any time last year in 2025? For example, if you made that contribution here in 2026, and you're going to have the necessary W-2 wages here in 2026 to support that employer contribution, then you can treat it as a tax year 2026 employer contribution. However, if you made that contribution in tax year 2025, so by December 31st of 2025, then now you're going to have to follow the excess contribution regulations. Let me share a link with you regarding the excess contribution regulations. Give me a moment here. And the excess contribution regulations apply differently based on whether you made an employee contribution or if you made an employer profit sharing contribution. Obviously, in your situation, you made an excess employer contribution, it appears. There's the link there to the excess contribution page on our website. Take a look at that page there as it goes over the excess contribution regulations. Okay, let's take a look at some more questions here. Give me a moment here. We have a lot of questions here today. We haven't even started going over today's topic yet. Give me a moment here. Trying to get to all these questions here. We're going to be live again here at 1 p.m. Pacific time today. So if we don't get through all your questions, you can join again then, and you can post your questions at that time as well. Here's a question here. I know that you get this question quite a bit, but sources keep saying it's 12/31 deadline. Do you, my solo 401k, get to change the deadline since it's a custom plan? I'm not sure what you're referring to. If you're talking about employee contributions, then no, we don't change the rules. They're all IRS statutory rules. With the solo 401k plan, one point of confusion I see quite a bit, however, is that and I can understand why, a lot of tax professionals out there tend to treat a solo 401k like a traditional 401k from a contribution deadline perspective. And they do that mistakenly, because with the solo 401k plan, it's only for owner-only businesses, whereas a traditional 401k is for common law employees. That means businesses with W-2 employees who are not owners in the business. So the regulations are more strict regarding the contribution deadlines. But with the solo 401k plan, since it's for owner-only businesses, and also because it doesn't fall under Title I of ERISA, like traditional 401k plans, they're oftentimes called ERISA plans. A solo 401k does not fall under Title I of ERISA. Therefore, the contribution rules are more lax regarding the deadlines. And you can take a look at it at IRS publication number 560. There's a chart on either page 2 or page 3. It just depends on when the IRS updates that IRS publication 560 on an annual basis. They oftentimes move that chart around, but there's a chart there that talks about how all solo 401k contribution types can be made by your business tax return due date plus timely filed extension. That's employee contributions and employer contributions, and voluntary after-tax solo 401k contributions are actually part of the employee contribution side. Okay, let's see here. Here's a question here. Can you discuss how it's possible to open and contribute to a solo 401k plan in 2026, but have it apply for the 2025 tax year? I thought the contributions had to be completed by December 31st of 2025. Good question, and this actually transitions to today's topic, which is how sole proprietors can still open a solo 401k plan in 2026 and make 2025 solo 401k contributions. So we've been answering a lot of questions now. Let's transition over to today's topic. Let me get back to my slides here. So get to the beginning of my slide presentation. Okay. Of course, before you can even look into opening a solo 401k plan here in 2026 so that you can still make contributions for tax year 2025, you need to make sure that you're eligible to open a solo 401k plan. So from an eligibility perspective, you must be performing material services. Another way of saying that is you're actually doing the work. So it cannot be passive income or investment income or capital gains income. It needs to be earned income. And earned income is typically subject to Social Security taxes, federal taxes. So there's another way of identifying it. In the context of a sole proprietor, that means that you're doing material services, whether you're a consultant or have your own sole proprietorship business, and you're receiving 1099 NEC income as a result, and then you report that on your Schedule C, on line 31 of your Schedule C, which is the net self-employment income line. So that line 31 is what is used to determine how much you can contribute to a solo 401k plan. That's the starting figure for calculating all solo 401k contribution types: employee contributions, employer contributions, and voluntary after-tax solo 401k contributions. More on the eligibility requirements is you cannot employ any W-2 employees who work 1,000 hours or more in your sole proprietorship business. We're honing in on a sole proprietorship because today's topic deals with sole proprietorships. We'll be putting on other webinars for S Corps, C Corps, and partnerships this week or in the coming weeks. But since today we're talking about contributions for a sole proprietorship, I'm concentrating on the eligibility requirements for a self-employed business that's taxed as a sole proprietorship. So you cannot employ any full-time W-2 employees who work 1,000 hours or more in your sole proprietorship. If you do, then you do not qualify to open a solo 401k plan. So that's another check mark you want to make sure you look at. Now, you can always exclude anyone who's under age 21 who's working in your sole proprietorship business. So if you employ any W-2 employees in your sole proprietorship business who are under age 21, regardless of how many hours they work, you can exclude them from participating in the plan. Let me get back to the beginning of my slide presentation here. Somehow they got flipped around. Okay. So why does this topic matters for sole proprietors? That is how you can still open a solo 401k plan here in 2026 and therefore make all contribution types for tax year 2025. So solo 401k plans are one of the most flexible and high limit retirement plans allowed for sole proprietors, single member LLCs taxed as sole proprietors, as well as independent contractors, because they allow for pre-tax contributions, Roth contributions, and voluntary after-tax contributions as part of the mega backdoor Roth. Now, because of Secure Act 2.0 changes, the deadline to set up and contribute to a solo 401k plan is more flexible, especially for sole proprietors and 1099 contractors. Let's see if I can increase my window here, the window size. So a solo 401k plan offers the highest contribution limits of all defined contribution plans. For example, for tax year 2025, you can contribute as much as $70,000 to a solo 401k plan for someone who's under age 50. If you're age 50 or older in 2025, you can also make a catch-up contribution to the solo 401k plan. Let's get to that slide here where we list the contribution amounts. So here's the 2025 contribution limits. If you're age 50 or older, you can also contribute $7,500 as a catch-up contribution. And then there's the super catch-up contribution of $11,250 instead of $7,500 for those who are age 60, 61, 62, or 63 in tax year 2025. So the super catch-up contribution, again, is available to those who are age 60, 61, 62, or 63 in tax year 2025. Here's a glance of the year 2026 contribution limits. but we're not going to talk about those right now because, again, today's topic is how sole proprietorships can still open a solo 401k plan in 2026 and make year 2025 solo 401k contributions. So for a sole proprietorship, you've got two deadlines here in 2026 for making contributions to a solo 401k plan for tax year 2025. So those who are looking to open a solo 401k plan for the first time here in 2026, and they want to make contributions for tax year 2025, then as long as you establish that solo 401k plan by April 15 of 2026, then you're going to be able to make employee contributions, employer contributions, and voluntary after-tax solo 401k contributions. So you're going to be able to make all three contribution types. So for the employee contribution, which is that $23,500 amount for tax year 2025, as long as you open that solo 401k plan by April 15 of 2026, you're going to need to also make the year 2025 employee contribution by April 15 of 2026. So you're going to want to open that solo 401k plan here in 2026 sooner than later. So don't wait until April 15, because if you wait to open the solo 401k plan by April 15, you may not be able to also get that contribution in time, that employee contribution in time for tax year 2025. But assuming you open that solo 401k plan by April 15 of 2026 and also make that employee contribution by April 15 of 2026, you can do so, and it'll count as a tax year 2025 employee contribution. And the reason you can do that is because Secure Act 2.0 changed the regulations regarding the contribution deadline for a sole proprietorship. It used to be that the employee contribution, that in order to make that employee contribution by April 15, you had to set up the plan by December 31st of the prior year. Well, not anymore because of Secure Act 2.0. Now, you can open the solo 401k plan by April 15 and also make that employee contribution, whether it's an employee pre-tax or an employee Roth solo 401k contribution by April 15 of 2026 for tax year 2025. And there's a little side note there regarding how 401k employee contributions are aggregated across all 401k plans. That means that if you also participate in a daytime employer 401k, for example, a day job 401k, and you max your employee contributions to that daytime job 401k, that's going to impact the amount of employee solo 401k contributions you can make. Obviously, if you're not employed by a W-2 job employer, or even if you are, but you don't participate in that daytime employer's 401k, then you don't have to worry about the employee aggregation rule, and you can still contribute a full employee contribution amount for tax year 2025, up to the overall limit of $23,500 of employee contributions. So in sum, because of Secure Act 2.0, if your self-employed business is taxed as a sole proprietorship, and you're looking to make contributions for tax year 2025 and have not yet opened the solo 401k plan, it's not too late. You can do so here in 2026 by opening that plan and funding that employee contribution by April 15 of 2026, resulting in being able to make tax year 2025 solo 401k employee contributions. Employer profit sharing contributions can also be made by April 15 of 2026, or they can be made by October 15 of 2026, as long as you open that plan by October 26th and make the contribution by October 15 of 2026 for tax year 2025. And just like employee contributions are going to be based on your net self-employment income, line 31 of your Schedule C, same thing for employer profit sharing contributions. So don't get those employee contribution deadlines and the employer contribution deadlines mixed up. Again, the employee contribution has to be made by April 15 of 2026 if you are now opening the plan in 2026 for the first time. You'll want to open that plan by April 15 and contribute by April 15 of 2026 for tax year 2025. So you'll be able to make your tax year 2025 employee contribution. However, you're going to be able to make employer profit sharing contributions if you open the solo 401k plan anytime this year up until October 15 of 2026 if you file a personal Form 1040 tax return extension. Same thing with voluntary after-tax solo 401k contributions. It's not too late to open a solo 401k plan here in 2026 or 2025 so that you can make voluntary after-tax solo 401k contributions as part of the mega backdoor Roth strategy. Just like employer profit sharing contributions, you can open the solo 401k plan by April 15 of 2026, or if you file for an extension, you have until October 15 of 2026 to open and make year 2025 voluntary after-tax solo 401k contributions, and then perform the mega backdoor Roth strategy. So this is great news for self-employed sole proprietorships. And these same rules apply on the employer contribution and voluntary after-tax contribution side for S corporations, C corporations as well. So if your business is taxed as an S corporation or a C corporation, you have here in 2026, you can open a solo 401k plan here in 2026 by March 15 if your business is taxed as an S corporation. If you file an S corporation Form 1120S extension, you're going to have until September 15 of 2026 to open and fund the contributions for employer and voluntary after-tax contributions for tax year 2025. So you'll be able to make tax year 2025 solo 401k contributions on the employer and voluntary after-tax side if your business is taxed as an S corporation. And if it's a C corporation, it's going to be just like a sole proprietorship regarding how you can make voluntary after-tax solo 401k contributions and employer profit sharing contributions by April 15. Or if you file for a C corporation tax return, so the Form 1120 extension tax return, you'll have until October 15 of 2026 to open and make the tax year 2025 voluntary after-tax solo 401k contributions for tax year 2025 and also employer profit sharing contributions. But you're not going to be able to make employee contributions if your business is taxed as a sole proprietor, if your business is taxed as an S corporation, C corporation, or partnership, you cannot make any employee contributions for tax year 2025 if you did not open that solo 401k plan by December 31st of 2025. But that's for employee contributions. But you are going to be able to make voluntary after-tax. Excuse me. Excuse me. You will be able to make voluntary after-tax and employer contributions in 2026 for 2025 if you do open the solo 401k plan here in 2026 for a business tax as an S corp, partnership, or C corporation. Excuse me. Okay. Let's continue here. So let's continue here. So action steps. If your self-employed business is taxed as a sole proprietorship, then you can open a solo 401k plan now in 2026, so you can make all contribution types: employee, employer, and voluntary after tax. Here at my solo 401k financial, we let you choose where to hold your funds. It's your money after all. It's your retirement fund, so you should choose where to hold your funds at. We let you decide if you want to use a brokerage firm or a bank or a local credit union. It's up to you. And we'll help you open those holding accounts for the solo 401k plan. So my solo 401k financial provides the solo 401k plan and the compliance support. Your local bank or large bank or credit union or brokerage firm will hold the funds. They serve as the depository taking institution of your funds. What's great about having a solo 401k plan for my solo 401k financial is that we don't have access to your funds. And that's by design, because we don't need access to your funds in order to provide the services that we do. And then once your holding account, aka bank or brokerage accounts for your solo 401k plan have been opened, then we'll help you make the contributions. We'll help you calculate the contributions, and then you're going to make those contributions directly to those holding accounts. You don't send money to my solo 401k financial. You would deposit those directly into the bank or brokerage accounts for the solo 401k. But we'll help you calculate those contributions. So some key takeaways here is that you can open a solo 401k plan in 2026 for your sole proprietorship, sponsor, self-employed business, and you can still make contributions for tax year 2025. That's going to be employee contributions, employer contributions, and voluntary after-tax solo 401k contributions. So you're going to want to plan to miss, so that you don't miss these opportunities. Okay, if you find this information helpful, we would really appreciate if you take a moment to subscribe and like it on the various social media platforms. This is going to help us to get the word out to other solopreneurs like yourself. Now, with my solo 401k financial, not only are we the solo 401k plan provider, so we provide a custom solo 401k plan that has all the bells and whistles, meaning you can make employee and employer Roth solo 401k contributions, voluntary after-tax solo 401k contributions. You can borrow from the solo 401k plan through a participant loan, and we'll prepare those solo 401k participant loan documents. We'll perform reporting for your solo 401k plan upon your request. We don't have access to your funds. So as the trustee of the plan, you need to make sure you communicate to us when you need to have a certain tax return form prepared. For example, whenever you process a conversion, especially a voluntary after-tax solo 401k mega backdoor Roth conversion, that's a reportable event to the government, and it's reported on Form 1099-R. We'll prepare that Form 1099-R and file it with the government at no additional cost. That's covered in our annual fee. Also, a Form 5500 Easy applies once the market value of your solo 401k plan is greater than $250,000 in value as of the end of the plan year. So for example, if the balance of your solo 401k plan was greater than $250,000 in value as of December 31st of 2025, a Form 5500 Easy is due to the IRS by July 31st of 2026. We'll prepare that Form 5500 Easy and file it electronically with the government for you, but you need to let us know so that we can prepare that form for you. We'll also assist again with helping you to open up the solo 401k holding accounts, aka bank or brokerage accounts. If you want to consolidate other retirement accounts like transferring IRAs or former employer plans to the solo 401k plan, we'll prepare those transfer forms to ensure that those transfers occur as a non-taxable trustee-to-trustee transfer. Therefore, it's not going to result in having to pay taxes when you move those retirement plans to the solo 401k plan. Our plan also comes with the $1,500 auto contribution credit. We were actually the first in the industry to offer a plan with the auto contribution credit. A lot more companies are now jumping on ship and offering the $1,500 contribution credit. We draft all solo 401k plans with the auto contribution credit. It's a $1,500 credit that it's spread out in $500 increments over a 3-year period. You need to make sure you open a solo 401k plan with a provider like my solo 401k Financial, who offers a plan that has the auto contribution schedules and language built into the plan. Traditional brokerage firms like Schwab and Fidelity, E-Trade, and so forth do not offer a plan with the auto contribution credit. And it's a dollar for dollar credit. And we draft new plans with this auto contribution credit. It really did not become available till January 1st of 2024 and after. So if you are a client of my solo 401k Financial prior to January 1st of 2024, we can amend your plan and add that contribution credit to your plan. Same thing, if you have an existing solo 401k plan with an outside institution, you can restate that plan to our plan and we can add that auto contribution credit to your plan. So with this auto contribution tax credit, the cost of opening and maintaining a solo 401k plan is practically free for many years to come. And one of the good things about a credit is that it reduces your taxable business income on a dollar for dollar basis. So it's more powerful than a business expense from a tax saving perspective. Also, once we add the auto contribution credit to your plan, you're now required to contribute to the plan. Yes, you heard that right. You can still contribute to the solo 401k plan, even if you do, you can still take advantage of the auto contribution credit, even if you do not contribute to the solo 401k plan. As a matter of fact, you're still going to be able to contribute any amount up to the overall contribution limit for the year. But you're not required to make contributions to the plan in order to qualify for the auto contribution credit. You just need to have a plan with the applicable schedules that allow for that auto contribution credit. And again, it's a $1,500 credit. You spread that credit out over a 3-year period in $500 increments. So those who open a solo 401k plan here in 2026, they'll be able to get a credit of $500 and they'll file Form 8881. And then they'll file another Form 8881 with their 2027 tax return to claim that second $500 amount, and a final Form 8881 for the 2028 tax year to claim that final and third payment of $500 for a total of $1,500 over 3 years. And the Form 8881, it's pretty straightforward to fill out. We do have a PowerPoint and a video walkthrough. It's a very easy form to complete. Okay, so again, thank you so much for joining today's daily webinar. We'll be live again here in a few hours to go over any more questions. Please take this time again to subscribe to our YouTube channel so that you receive notifications of when we go live. We would also appreciate if you like us across the various social platforms. We also have our My Community. You can visit our My Community at mysolo401k.net/My Community. There we have over 32,000 members with lots of forum posts. If you're a financial professional, whether a CPA, financial advisor, attorney, any type of professional, you can also post guest blog posts on that My Community so that you can share your services to all 32,000 plus members. And you can also link it back to your website so that they can explore your services. Great. Again, that's it for today's session. Thank you so much for investing your time with this. Your time is valuable and your retirement future is worth it. Again, if you haven't yet, please like and subscribe so that we can keep building this community. We'll be back here again in a couple hours with more crucial content.